Alright, hi everyone. Welcome to the pre-market live analysis session brought to you by IC Markets. Right, trust all of you have had a great weekend, catching up with family and friends, right? And let's begin the brand new trading week. Alright, before we begin today's webinar, right, do remember to smash the like button as well and drop any requests that you may have in the chat box as we proceed through today's webinar. Alright, hi Trading Boss, great to see you as well. And I'm doing great. Right. First of all, please take note of the disclaimer. Right, this is marketing communication and does not contain and should not be construed as containing investment advice, or an investment recommendation, or an offer of or solicitation for the transactions in financial instruments. Also, take note of the risk warning that comes with trading forex and CFDs, as they carry a high level of risk to your capital, and you should only trade with money you can afford to lose. My name is Ketan Ramachandra, and this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right, before we dive into the charts and trading view, let's take a look at what's up on the economic calendar for this week. There's quite a few things going on, right? We've got a central bank announcement from New Zealand, right? The Reserve Bank of New Zealand will drop its monetary policy statement on 9th of April. And on the same day, later on the same day, we have the Federal Reserve releasing its meeting minutes from the latest FOMC meeting that took place in March. And of course, wrapping things up, we have US consumer and producer inflation data coming up. Alright, hi Mas, alright, you've got a request for WTI, UK 100 and DE40. Yep, definitely we'll cover those as well. We'll start off with the dollar index, right? Touch on one or two major currency pairs, and then we'll work our way down to the commodities and the indices. Right, taking a look at the calendar, right, on Wednesday, 9th of April at 2 a.m. GMT time, the RBNZ is widely expected to reduce its official cash rate by 25 basis points, bringing it down to 3.5%. Right, so we can see that economic activity in New Zealand has been sluggish, while inflationary pressures have dissipated pretty steadily over the last 12 to 18 months. Hence, this central bank is going to move ahead with another rate cut. Right, combined with the ongoing global trade war that's brewing, right, we can expect global economic growth to take a further hit. Hence, right, it's very likely or almost guaranteed that the RBNZ will make this 25 basis points reduction. Right, and at 6 p.m. GMT time on Wednesday, 9th of April, the Federal Reserve will release its latest minutes from the FOMC meeting that took place in March. And then on Thursday and Friday, right, 10th and 11th of April, we'll receive consumer and producer inflation data from the US. Now, taking a look at what happened last Friday, right, 4th of April, right, the Bureau of Labor Statistics released its employment report, where we got the latest insights into the non-farm payrolls and unemployment rate for March. Right, this was released on Friday, 4th of April at 12:30 p.m. GMT. Now, this was somewhat a mixed result, or mixed employment report, in the sense that we saw February's data being revised lower from 151,000 down to 117,000. Take note, February initially came in at 151,000. However, we saw very strong job growth in March. We saw about 228,000 jobs being added to the US economy or labor market versus the forecast of 137,000, so a very strong figure. But we actually also saw the unemployment rate increase slightly from 4.1% to 4.2%. Right, the unemployment rate was expected to remain unchanged. However, I think we've seen this stronger jobs figure overshadow the other two data points, as non-farm payrolls came in at the strongest or highest level in 3 months, as you can see on this chart here, with sectors or categories such as healthcare, social assistance, and transportation warehousing leading the gains in job growth. However, if you look at the revisions for January and February, they have resulted in an overall 48,000 jobs lower, right? Especially for March, right? Especially for February, we saw jobs being revised lower from 151,000 down to 117,000, right? So almost about 34,000 jobs being revised lower, right? So let's take a look at the dollar index. Right, let's start off the analysis with the dollar index and see how this result impacted that index as well as some of the other currency pairs. All right, hi Watson, great to see you as well. Mutitu, you too. All right, so let's now dive into the charts and trading view and begin the analysis on the dollar index. Right, I'm on the daily time frame here, but let's quickly zoom on down to the 30-minute time frame and take a look at what happened to this index following the non-farm payroll. So non-farm payrolls is highlighted by this yellow vertical line, right? It was released on Friday, 4th of April at 12:30 p.m. GMT, right? So we've seen dollar index like drop below 103, 102 last week, right? As global as concerns surrounding a global trade war escalated, with investors all around the world dumping the dollar. Hence, the dollar index weakened significantly. However, we can see, right, post NFP announcement, dollar saw a very strong bid, finding support or stabilizing roughly around 101.80 to stage a very strong rebound. Right, we saw the dollar index rebound as high as 1.3%. Right, following the release of the non-farm payrolls, rising beyond 103 before pulling back slightly and dipping under this level once again. Right, so we've seen a strong bid for the dollar following the non-farm payrolls, but however, right, with concerns about a global trade war continuing to remain high, right, I think the dollar is likely to remain under pressure, right? So any retracement to the upside for the dollar index could be met with resistance, and that's where it has been identified as the pivot. The pivot at 103.26 is an overlap resistance, right? We can see that previously this level here functioned as resistance back in August of 2024. After that, we can see it almost formed like a double bottom here, right? Bouncing off this level on 18th of October and then again on the 5th of November. And once again, we can see very clearly another nice double bottom with a bounce here on 12th of March earlier this year, right? Just last week, or just 4 weeks ago, and then on the second bounce on the 18th of March as well. So very clearly a pretty significant overlap level, which could provide some resistance to the dollar index after rebounding quite sharply last Friday. Right, so after the non-farm payrolls triggered strong demand for the dollar, we saw the dollar index surge over 1.3% during the US session last Friday, and I think any retracement to the upside could be met with strong resistance, and that's likely going to be at this overlap resistance at 103.26, which is the pivot. Right, we've also run a Fibonacci retracement from this swing high here on 13th of Jan going down to the swing low on the 3rd of April. Looking at all the fibs, we can see that the 23 and 50% retracement align pretty well with the pivot and first resistance respectively. So the pivot is an overlap resistance that's accompanied by a Fibonacci retracement at 23.6%. While we also have the first resistance at 105.68, identified as a pullback resistance previously. This level served as a nice double bottom here, or served as a nice support, forming a nice swing low here, multi-swing low at 105.68. But once this level gave way, this is likely to function as a pullback resistance, and it's also accompanied by a Fibonacci retracement at 50%. So that's how the pivot and first resistance has been identified. Slightly below, right, at 101.79, right, is where the first support has been identified. This is another overlap level as well. Previously, this level served or functioned as resistance back on 2nd and 12th of September last year, right, forming a little bit of resistance for the dollar index before breaking higher. And after that, once it breaks higher, this level is likely to function as a support, which it looks to have played out quite nicely last Thursday and Friday. Of course, we can see Thursday's wick dropping as low as 101.23, but generally we see this level as managed to stabilize the dollar index here. So this creates a nice overlap level at 101.79, which has been identified as the first support. Right, and we can also see, right, the dollar index continuing to trade underneath the red Ichimoku cloud, right, highlighting the ongoing bearish momentum, as well as slightly higher up, right, there's a nice descending trend line that's been in place as well, right. Of course, this is pretty much higher from where price is currently trading, but do take note of this descending trend line as well, and the fact that the dollar index continues to trade underneath the red Ichimoku cloud, highlighting the ongoing bearish momentum. Right, so just to recap, for the dollar index, we saw a strong rebound or strong demand for the dollar following the non-farm payrolls last Friday. However, I think any retracement to the upside is likely to be met with resistance due to the ongoing concerns surrounding the global trade war, and we're likely to see the dollar remain under pressure. So where the pressure could come in, or ceiling could come in, would be at the pivot at 103.26, and overlap resistance accompanied by Fibonacci retracement at 23.6%. This is where we could see the dollar index stall and perhaps reverse to resume the downtrend. Alright, hi Razakhan. Right, yeah, we'll definitely cover gold as well. Right, as I mentioned, we'll start off with the dollar index, look at one or two of the major currency pairs, and then go on down to the commodities, looking at gold and oil, and of course the indices as well. Alright, so looking after dollar index, let's take a quick look at the dollar yen. Right, dollar yen stabilized as well, and if we look at the 30-minute chart, is very likely, right, we can see that following the results, the release of the non-farm payrolls last Friday, which is this vertical yellow line here, right, we can see the dollar yen has rebounded quite strongly as well, right, rebounding as much as 1.5 or nearly 1.6% on Friday before running into resistance at around 147.50. So coming back to the daily time frame, right, similarly to the dollar index, right, dollar yen could continue to climb a little bit higher. However, I think any retracement to the upside is likely to be met with resistance, and where that resistance would come in for the dollar yen, it's around 148.68. Right, this is a pullback resistance. Right, if you zoom in a little bit, this level function as a pretty decent support level here, from 19th of March till the 21st of March, and then bouncing off this level once more on 31st as well. So what was previously a pretty decent support level could function as resistance. So that's how the pivot has been identified, and it's also accompanied by a Fibonacci retracement at 61.8%. We found this retracement starting from this swing high on 28th of March, going down to the swing low on the 4th of April. We can see that the 61.8% retracement aligns very well with the pullback resistance, which is the pivot at 148.68. Higher up, there's a nice overlap resistance at 151.18. That's where the first resistance has been identified. And you can see here previously, this level functioning as a nice swing low support here on 7th of Feb, bouncing off this level again on 18. And then once it broke higher, it ran into resistance not once, but twice, running into resistance here on 3rd of March, and then again into this swing, making a swing high resistance right at the end of March as well. So this creates a pretty significant overlap. Then at 151.18, which we can identify as the first resistance. Now, on this prolonged downtrend here, right, we can start a Fibonacci retracement as well, starting from this swing high on 10th of Jan, going down to the swing low here on the 7th of on the 4th of April, sorry, and we can see that the 50% retracement aligns slightly above the overlap resistance at 151.18, so we can use the 50% retracement here in the analysis and identify this as a resistance barrier here. And of course, similarly to the dollar index, we can see the dollar yen trading underneath the red Ichimoku cloud, highlighting the ongoing bearish momentum, as well as I want to bring your attention to this descending trend line as well. As a pretty significant descending trend line that's that's been in place for the dollar yen. Alright, so take note, these are the key resistances for dollar yen. The pivot is a pullback resistance at 148.68, accompanied by a Fibonacci retracement at 61.8%, and the first resistance at 151.18 is an overlap level that's accompanied by the 50% Fibonacci retracement. Now, in terms of support, right, we can see that the dollar yen has bounced off 144.74 quite nicely last Friday, 4th of April, and this level here is also had been identified as a pretty decent pullback level here. Now, previously, back in September of last year, right at the end of September. This level functioned as a resistance before dollar yen pulled back and then finally making a bullish break higher in the first week of October. So what was previously a resistance could now function as a support level, right? As a potential pullback support level, which is what has happened quite nicely last Friday, creating an overlap. So the first support is at overlap level at 144.74, which is also accompanied by a Fibonacci extension at 127%. Now, this extension level was found by running a retracement from this swing low, 11th of March, going up to the swing high here on the 28th. We can see that the extension at 127% sits at 145.27, pretty close to the first support. So we can see here dollar yen stabilizing within this zone to rebound higher last week, fueled by the stronger than expected non-farm payrolls. However, similarly to the dollar index, any retracement to the upside is likely to be met with resistance, and where that could come in for the dollar yen is at the pivot level at 148.68. Alright, now let's move on over to the commodities, beginning with gold, and then we'll look at crude oil. Right, ticker symbol for spot gold is XAU USD, and we can see that spot gold made its latest intraday all-time high last Thursday, 3rd of April, and that level was at $3,167.72 per ounce. Since last Thursday, we've seen gold prices pull back quite sharply. Like looking from the peak of Thursday to the lowest point on Friday. Gold prices have dropped more than 4.7%, nearly dropping 4.8% in a couple of days, right? Pretty big drop for this precious metal, and I see it falling towards support level at $2,954. Now, this support level is a pullback level because previously it functioned as a nice swing high resistance back in the third week of Feb, and then once it broke higher, this swing high resistance is likely to function as a pullback level, right? So the pivot at $2,954 is a pullback support level that's accompanied by Fibonacci retracement at 38.2%. Now, this retracement level was found right by beginning a Fibonacci retracement from this swing low here on the 14th of November, going up to the swing high on the 3rd of April, right? We can see the 38.2% retracement sitting just below the pullback level, highlighting a pretty decent support zone here for gold. So should we see gold prices fall all the way down into this zone here, this is quite likely where it's going to stabilize and perhaps reverse the bounce higher. And of course, we can see that this precious metal continues to trade above the green Ichimoku cloud, highlighting the ongoing bullish momentum, right? And at the same time, right, I think it's a pretty decent ascending trend line that we can identify as well, right? There's a nice ascending trend line that's been in place, right? We can see gold prices bouncing off this trend line several times in mid-Jan, and very clearly here at the end of Feb and mid-March as well, right? So you can see this trend line has supported prices, right, since mid-Jan, right? And this is an area to watch out for as well, right? So we could see spot gold stabilize, find support once again at the ascending trend line before reversing to bounce higher, or if this trend line doesn't hold, where a major support comes in is the pullback level at 2,954, which is accompanied by a Fibonacci retracement at 38.2%. Right, in terms of resistance, right, the swing high resistance that was formed on Thursday, 3rd of April, right, this is going to be where the first resistance has been identified using the body of the candle here. The close on Wednesday, 2nd of April at $3,132 is where the first resistance sits. And beyond the pivot, which is the pullback level, we have a first support at $2,790 per ounce. This is another pullback level. Why is that the case? Right, we can see another swing high or significant swing high resistance being formed right at the end of October, right? Very significant swing high resistance that was formed, and we can see gold running the resistance at the end of January as well, before finally breaking higher. And on 3rd of Feb, right, it ran into resistance, broke higher, found support before resuming the uptrend. So this creates a pretty decent overlap level, at $2,790, right? This is actually an overlap level that's accompanied by a Fibonacci retracement as well. Right, you can see the first support at $2,790 per ounce is an overlap level that's accompanied by a Fibonacci retracement at 61.8%. Right, so once again, these are the key levels for spot gold, XAU, USD. Gold prices have pulled back quite sharply since Thursday, dropping nearly 4.8%. We can also see that gold continues to make a series of higher highs and higher lows. It trades above the green Ichimoku cloud as well, highlighting the ongoing bullish momentum. And this ascending trend line has been in place since mid-Jan as well. Right, so if this trend line doesn't provide support, we're quite likely to see spot gold stabilize within the support zone here, as identified by the pivot, a pullback level, and the 38.2% Fibonacci retracement. This is where we could see spot gold stabilize once again if the ascending trend line does not hold, and we could see a nice resumption of the uptrend should we see prices stabilize within this support zone here. Alright, now let's move on over to crude oil. There's a request for WTI oil as well. Right, so XTI USD is the instrument that tracks WTI crude oil futures, and we can see crude oil has tanked since last week. Right, we saw crude oil prices nosedive, right, following the announcements of tariffs by the US on 2nd of April. Right, that date was widely known as Liberation Day as well. And looking at crude prices, right, from Wednesday's high all the way down to Friday's low, we can see crude prices have dropped well over 16%. If you look at it on a weekly basis, this is one of the largest weekly drops, I would say, since perhaps 2nd of September, or maybe even here, 2nd of October 2023. 2nd of September looks to be a pretty big drop as well. Let's see. Okay, let's see, from looking from this is, yeah, looking from the peaks, I guess, the absolute peak. Oh, okay, perhaps this one here, right? Yeah, since May of 2023, right, last week's drop in crude oil prices, specifically WTI oil, has been the largest peak to trough move since 1st of May 2023. Right, now coming back to the daily time frame, right, we can see that WTI oil has broken through the pivot at $66.23. This pivot is actually a very significant multi-swing low support, or previously was a multi-swing low support. To sort of truly appreciate this swing low support, we're going to have to go on to the weekly time frame and take a look at it here. Right, looking at it on the weekly time frame, right, we can see that the level of $66.20 has functioned as a significant support several times since December 2021, where you can see a significant swing low being formed here on 29th of November 2021. We see like a nice double bottom being formed here, the first on 20th of March 2023, and then a bounce here on 1st of May 2023, right? You can even argue here that crude oil prices, WTI oil, stabilized above this level on 11th of December 2023. And of course, since September last year, we can see crude oil prices stabilizing above this level several times before staging a pretty strong rebound at the end of December and early Jan this year, end of December last year, early Jan this year. And then from mid-Jan all the way till the first week of March, we saw crude prices drop significantly before stabilizing around $66.20 once again. However, this time round, last week, this level failed to offer any support, and we saw crude prices break through a very significant, or break under a very significant multi-swing low support at $66.20, which was the pivot. And this pivot now is going to be used in the identification of a resistance. Right, the pivot at the present moment, right, coming back to the daily time frame, is identified as a pullback resistance at $66.23, which is also accompanied by a Fibonacci retracement at 23.6%. This retracement was found beginning from this swing high on 15th of Jan, going down to the swing low of last Friday, 4th of April. Right, we see crude prices bouncing off $61 last week. However, should we see any retracement to the upside, right? If we see any retracement for crude oil to the upside, it's likely to run into resistance at around $65.50 to $66.20, right? I see a pullback resistance accompanied by a Fibonacci retracement at 23.6%. In terms of the first resistance, that's identified at this swing high here that has taken place last Tuesday at around $71.20 per barrel, and is also accompanied by a Fibonacci retracement at 50%. Right, actually, wait, hang on, I don't really quite like this retracement here, because we can see it actually I would probably use, I'm more likely to use the retracement from here, right? This is a much better retracement to do, right? We can see the trend line of the Fibonacci retracement tool capturing the market structure really well, and in this case here we can see the 50% retracement accompanying the pivot very well, right? It aligns almost perfectly with the pivot at $66.23, right? The reason I don't want to use this retracement here on this downtrend, because we can see there's a very strong retracement to the upside, and the trend line of the Fibonacci retracement tool does not capture this part of the market structure that well, or doesn't capture it at all, right? Hence I don't want to use this retracement here, and I would more likely to inclined to use this retracement beginning from 2nd of April till the 4th. Right, so first resistance is a swing high resistance at $71.80. Pivot at $66.23 is the pullback resistance, accompanied by a Fibonacci retracement at 50%. And of course, the first support at $61 is a swing low support as well. That's accompanied by a Fibonacci projection at 78.6%. So this projection level was found starting from this swing high on 15th of Jan, 0.1, going down to the lowest point, which is here, 0.2. 5th of March, and ending at 0.3, which is here on 2nd of April. And we can see the 7.6% projection sitting slightly below where price stabilized last Friday. And if we zoom out once again, right, we can see here this level has functioned as pretty strong support since 20th of April 2021, right? We can see crude oil prices, WTI oil, stabilizing at around $61 per barrel back in April of 2021, making a nice swing low bounce here in May of 2021 as well, and making another very significant swing low in August 2021. So very significant multi-swing low support at $61, which has been identified as the first support for WTI oil in the current context. So coming back to where crude prices are currently trading, right, we can see here it looks to have bounced off this significant multi-swing low support last Friday. So any retracement to the upside for XTI USD is likely to be met with resistance, and that could come in at $66.23, a pullback resistance level that's accompanied by a Fibonacci retracement at 50%. All right, let's move on over now to the indices. All right, hi Ren, you got a request for Aussie and cable as well. All right, okay. All right, before we move on to the indices, let's take a look at these two currency pairs. All right, so British pound, US dollar is also known as the cable, and we can see that last week this currency pair made a high of 1.3207, breaching above this level briefly on Thursday, 3rd of April, before retreating very sharply on Friday. Right, this was primarily due to the stronger than anticipated non-farm payrolls that was released on Friday, 4th of April at 12:30 p.m. GMT time. So if you look at the 30-minute chart and try and pinpoint exactly where non-farm payrolls was released, which is here, this vertical line, dotted line in yellow, right, 12:30 p.m. GMT was when non-farm payrolls was released. We saw about 230,000 jobs being added to the US economy, much significantly higher than the forecast of about 130,000, right? And that triggered strong demand for the dollar, causing this currency pair to reverse quite sharply post non-farm payrolls. we saw cable drop as much as 1.4%. And if we actually look at it from the peak of Thursday, 3rd of April, this currency pair has lost well over 2.6%, right? Pretty huge drop in a couple of days. Now coming back to the daily time frame. Coming back to the daily time frame here, right? We can see I can see cable falling towards. Okay, before that, we can see that this currency pair has been trading in a pretty decent upward channel as well, right? There's a nice upward channel here. Let me see if I can just highlight the channel a little bit more clearer or make it more visible, right? You can see there's a nice upward channel for cable that has been in place since I would say the end of Jan. Right, we can see cable bouncing off the lower trend line of the upward channel several times and running into resistance here at the upper trend line of the upward channel, especially in mid-March. Right, so this channel continues to be respected, but we saw a strong drop for cable last Friday, and I think this area or the channel itself could once again function as support for this currency pair. Otherwise, if the channel fails to hold, where cable could stabilize is the pivot at 1.2771. Now the pivot, right, this level here was previously a significant swing high resistance that was formed in December of last year, right? But after breaking higher, this swing high resistance could now potentially function as a pullback support, which is why the pivot has been identified at 1.2771, and it's also accompanied by a Fibonacci retracement at 38.2%. Now this this retracement level was found beginning from this swing low here on 13th of Jan, going up to the swing high of last Thursday, and we can see the 38.2% Fibonacci retracement accompanying the pullback support very well, which is the pivot a little bit below. Right, it's a pretty decent overlap level at 1.2550. Right, we can see previously resistance being formed here on 5th of Feb, and we can also see resistance being formed here on 7th of Jan. And once price broke higher in mid-Feb, we can see a cable making a double bottom here before bouncing higher. So this creates a pretty decent overlap level, right, that we can identify as the first support. The first support at 1.2550, right, is actually a very nice overlap level that's accompanied by a Fibonacci retracement at 61.8%, right? We can see the 61.8% retracement sitting just below the overlap support, right? And in terms of resistance, right, of course, we're using the body of the candle here, the close on Thursday, right, to identify the first resistance at 1.3100. Right, so these are key levels for cable here, right? We saw a strong reversal or strong rebound for the dollar index as demand for the dollar surge following the non-farm payrolls last Friday. However, I think any retracement to the upside for the dollar index is likely to be met with resistance, so that in turn would create a floor for cable, right? We can expect this currency pair to stabilize at least within the upward channel. If the channel does not hold, then where I could find support would be the pullback level, which is the pivot at 1.2771, which is also accompanied by a Fibonacci retracement at 38.2%. Right, now let's move on over to the Aussie. Right, looking at the Aussie, right, we saw this currency pair nosedive last Friday, and no surprises there. This is quite likely due to the non-farm payrolls as well, right? That was released at 12:30 p.m. GMT time, right? Following non-farm payrolls, right, we saw this currency pair drop over 2.5%, and if you look at it since last Thursday, right, since Thursday, this currency has nosedive well over 6%. Now coming back to the daily time frame here, right? We can see that the Aussie had broken through the pivot at 61.39, right? This pivot here previously functioned as support on 10th of Jan, and then again on 4th of Feb, creating like a nice double bottom here. However, last Friday, this level failed to hold prices, with Aussie breaking underneath it. So we could see a nice retracement to the upside here, right? At the beginning of the week, we could see a retracement to the upside for the Aussie. And once again, similarly to the dollar index, it could run into resistance at its own pivot at 61.39 and perhaps reverse to resume the downtrend. Now we can probably run a Fibonacci retracement from this swing high here on 3rd of April, going down to the low of Friday, 4th of April. Perhaps that's a 38.2% retracement. It's going to be sitting here. Right, yeah, there's a pretty decent 38.2% retracement that aligns very well with the pivot. Pivot's a pullback resistance at 61.39, and beyond that, beyond the pivot, there's a multi-swing high resistance at 64 cents. Right, we see the first swing high resistance being formed at 64 cents on Friday, 21st of Feb, and the second one being formed here in mid-March, and of course last Thursday. Aussie running the resistance once again. It's a very clearly a strong barrier here at 64 cents. Now for the Aussie, if you look at the first support, it looks to be no major support, right, all the way down until 57.42, right? There's a pretty big gap. Oh wait, hang on, there's actually, yes, okay, yeah, because if you look at it here, right, going back to the lows of March 2020, right, I guess we can see there's a pretty decent swing low that was formed here, but I believe this level has also been broken, right? Let's take a quick look. I believe this swing low support that was formed on April of 2020 at 59.90 has, alright, okay, we can see the Aussie bouncing off this level just quite nicely last week, right? So I think, let's see, can we use this as a first support? I think this is more likely going to serve as a downside confirmation level, right? I would still like to keep the first support at 57.42, which is the March lows of 2020. So if you look at it, this level at 59.90, right, I'd probably like to highlight this as a downside confirmation level, right? So should we see any retracement to the upside, right? Should we see any retracement to the upside towards the pivot, we could see the Aussie stall at around 61.40 and then reverse to drop lower. And if this level at 59.90 gives way, then I think we could see a much deeper move to the downside for this currency pair, right? Okay, so these are the key levels for the Aussie here. Right, then let's move on over to the indices, right? Okay, so we've covered crude oil, gold, Aussie, cable, the dollar index. Let's move on over to the indices, starting with DE40, right? DE40 is an instrument that tracks the DAX futures, and we can see that equity markets have taken a strong hit over the last couple of weeks, right? With the DAX making its intraday high here, latest intraday high on 18th of March. Since then, this index has lost well over 13%, right, in a couple of weeks, right, breaking through many key levels, many key support levels here, and it looks to have broken through a previous pullback support as well. This level at 20,476 previously functioned as a swing high resistance on 11th of December, running the resistance here on 9th of Jan as well, and it has broken under this level last week, right? So any overhead pressures continue to remain for equity markets. So I think we could see this index retrace a little bit higher, and where I can run into resistance is at the pivot level before reversing to resume the downtrend, right? So the pivot at 20,476 is a pullback resistance, right? Pullback resistance level, which could create headwinds for this index once again before reversing to resume the downtrend, right? Actually, I see a nice overlap, another nice pullback level here, overlap level for the DAX, and that level sits at 19,681, right? We can see that previously this level functioned as significant resistance back in October of last year, and then when price broke higher in December, we saw a strong pullback with the DAX stabilizing above 19,700 once more before reversing to bounce significantly higher. So this level at 19,681 is a very significant overlap, which we can use in the identification of the first support. Now we can also run a Fibonacci retracement starting from this swing low here on 5th of August, going up to the intraday all-time high on the 18th of March. Let's take a look at all the fibs. Let's see if, yes, we can see the 61.8% retracement sits just underneath the overlap at 19,681. So we're going to keep this retracement level as it accompanies the support area pretty well. Right, so we have identified a major support level or support zone at around 19,500 to 19,680. It's an overlap level that's accompanied by Fibonacci retracement at 61.8%. Right, we see the DAX breaking through the pivot. The pivot previously was a pullback support level. Now that this level has given way, is likely to function as resistance, a potential pullback resistance, and we could see DAX slide lower towards the first support at 19,681, which is an overlap level that's accompanied by Fibonacci retracement at 61.8%. Alright, okay, so this is the DAX. The 40 is the instrument that tracks the DAX, and we've seen a very strong correction for the DAX, right? If you look at it on the weekly time frame, right, this has been the largest drop. I guess even weekly drop, even surpassing the COVID drop, right? Let's just take a look from the open of last week to the close. The DAX has dropped. Hang on. Let me see. Let's just zoom in a little bit on the weekly candle from the open to close. Right, DAX has dropped about 9.3%. Right, I think this has been definitely much larger than any of the weekly candles. All right, okay, it's as deep as the weekly candle, the first weekly candle back in Feb of 2020. Right, this was a week where the DAX dropped over 11%, and in the present moment it's dropped almost 9.3%. Right, so not as sharp as the first weekly decline back in Feb of 2020, but nevertheless this is a huge drop for the DAX last week, right? Falling 9%, well over 9% in 1 week is a huge nosedive here, right? And we can see equity markets being pressured, global equity markets being pressured over the last couple of weeks. Now, right, okay, so with that, there's also requests for NASDAQ and UK 100, right? Let me see, where's UK 100? Okay, so UK 100 here, right? This is the index that tracks the FTSE 100 futures. Let's start with a clean slate here. This was right, even for this, oops, let's look at it on the weekly. Here we can see that last week's drop alone, right, we saw the UK 100 drop over 7.5% compared to that first major COVID drop, right? 9.6, not as deep as the first weekly decline back in Feb of 2020, but nevertheless a 7.5 decline in 1 week is pretty steep as well. Right, now coming back to the daily, right, you can see here the DAX, outside of the DAX, UK 100 has broken through a pretty significant support level here at 8,035, right? This is a multi-swing low support, right, with UK 100 bouncing on this level several times. Now this level has given way, right? This likely is to what was a multi-swing low support in the past is likely to function as a pullback resistance now. So that's where the pivot has been identified, and we could see any retracement to the upside likely to be met with resistance at around the pivot, and we could see the downtrend resume from this point. In terms of resistance, right, I think the first resistance for this index is likely to come in at around, see, a pretty decent overlap level here. That is a pretty decent overlap level at around 8,190, right? We can see UK 100 previously finding support on September and October of last year before running the resistance on 6th of November, creating a pretty decent overlap, and where it managed to stabilize in the first week of Jan as well. So this is a pretty decent overlap level, which we can identify as the first resistance. And in terms of first support, we're going to have to zoom out a little bit, and I see another nice overlap level here at around 7,771. Right, pretty significant overlap level here at 7,757, which we can identify as the first support here. Right, we can see UK 100 running the resistance several times. We get swing high resistance here on September 2023. Then again in Jan 2024, resistance once again in Feb, and a little bit of consolidation, resistance and support here in mid-March. So very clearly a pretty significant overlap level where we saw UK 100 bounce off very strongly on 19th of April as well, 2024. So that's how the first support has been identified for UK 100. So once again, global equity markets remain under intense selling pressures, right? So and with UK 100 breaking through a prior multi-swing low support at 8,035, this level is likely to function as resistance now. So any retracement to the upside could be met, could cause the UK 100 to stall around this level before reversing to resume the downtrend. All right, let's take a look at US Tech, right? Okay, US Tech is an instrument that tracks the Nasdaq as well, and then we'll wrap things up with Bitcoin. But before I do that as well, I'm just going to launch a poll. Truly appreciate it if you guys can give your feedback with regards to today's webinar, and then we'll continue the session with US Tech and Bitcoin. Right, just launched the poll as well. Truly appreciate it if you guys can give your feedback with regards to today's webinar, and we'll resume the session with US Tech. This is the instrument that tracks the Nasdaq futures, and then we'll wrap things up with Bitcoin as well. All right, okay, so taking a look at Nasdaq, right? No surprises here. That looking at a weekly basis, right? This was a huge drop as well, right? Just last week alone, on US Tech dropping well over 10%, and since its peak intraday high on 17th of Feb, this instrument has entered bear market territory, right? Dropping from peak to trough 22.56%, right? So US Tech is the instrument that tracks the Nasdaq futures, and this index, or rather this instrument, has entered bear market territory. Right, we are officially in a bear for tech, US Tech, and now coming back to the daily time frame, right? Or maybe let's just keep it on the weekly first, because I see a pretty significant support level here, right? I see very strong swing high, significant swing high resistance that was formed in December 2021, very significant swing high resistance back here, and then we see a little bit of consolidation in Jan 2024. Right, so this looks to be a pretty decent support level. So this is where the the US Tech is falling towards, and it's quite likely it could stabilize at around 16,637. So first major support for US Tech is at this pullback level here at 16,637. Right, and it has also broken through. Right, the Nasdaq has broken through very significant overlap, right, at 18,368 as well. So this is going to be identified as the pivot now, right? And now let's come back to the daily time frame and just try to fine tune the analysis perhaps. Right, okay, looking at the daily time frame, right? First support is going to be at around 16,604. Pivot, I think looking at the daily time frame here, we can see there's a significant swing low, almost like a nice overlap level at around 17,800. That was broken last week, of course. So I think now this overlap, what was previously a pretty decent overlap support, could function as overlap resistance, which is what the pivot is. And we could see if any retracements to the upside take place for US tech, this is where it could run into resistance and resume the downtrend as well. Otherwise, the first major support is at 16,600. It's an overlap level, right? And first resistance is likely to be another pullback level here, right, at 18,303. Okay, so these are the key levels here for US tech, right? Once again, similarly to all the other major indices, right? The DAX, US 500, UK 100, all of them are seeing significant overhead pressures, a very strong sell-off, with the Nasdaq entering bear market as well. All right, okay. Now let's wrap things up by moving over to Bitcoin. And once again, for those of you who have responded to the poll as well, truly appreciate it. Okay, let's quickly move on over to Bitcoin, and we can see Bitcoin actually testing the pivot here. The pivot previously was a swing low support, right? That was formed quite nicely here on 11th of March. It is also a level where Bitcoin bounced off previously at the end of Feb. However, this time round, it looks like the pivot is not holding up, right? It's not holding up. However, this level here is okay. It's also accompanied by a Fibonacci retracement at 50%. So this level looks to be giving way at the present moment. So what we're probably looking at now, instead of a stabilization for Bitcoin before reversing the bounce higher, what we're probably looking at is a potential bearish breakout here, right? Potential bearish breakout for Bitcoin through the pivot and the 50% Fibonacci retracement. And if this sell-off deepens even further, right, then the first major support for Bitcoin is likely to come in at 73,240, which is a pullback support level that's accompanied by Fibonacci retracement at 61.8%. This retracement level was found beginning from this swing low here on 4th of August, going up to the intraday all-time high on 20th of Jan. Right, so you can see here Bitcoin looks to be breaking through its pivot now, right? This was a level 79,600 was previously a level where Bitcoin had stabilized since the end of Feb. However, this time it looks to be giving way, and we could probably see especially if it breaks beyond 76,000, right? Especially if it breaks beyond 76,000, then we're likely to see this coin drop all the way down towards the first support at 73,240, which is a pullback level that's accompanied by a Fibonacci retracement at 61.8%. Right, in terms of resistance, okay, now I'm going to move the resistance a little bit lower, right? Especially if we do see this bearish breakout materialize, right? There's a major resistance here at 88,147, right? You can see Bitcoin running into resistance here since 20th of March, and there's probably a Fibonacci retracement as well that we can use. Let's look at all the fibs. Right, we have the 38.2% retracement that accompanies the first resistance pretty well. So let's just keep that level on. Right, there we go. Right, I was expecting Bitcoin to stabilize at around $79,600 today, right, or the beginning of this week, as this was a level that had held up pretty well since 28th of Feb, and it's also accompanied by Fibonacci retracement 50%. However, this time it looks to be giving way, and remember, any further sell-off for Bitcoin, right, is going to probably drive it all the way down towards the first support at 73,240 is a pullback level that's accompanied by Fibonacci retracement at 61.8%. Alright, thanks Trading Mask for the kind word, truly appreciate it, right? And once again, thanks everyone for taking part in the poll as well. All right, okay, there's a request for US 2000. Okay, let's quickly try and do that as well. This probably is going to be the last one. Let's take a look at US 2000. What is that? Yep, there we go. Right, US 2000 is the Russell Small Cap Index, right? And just like all the other major indices, this has nosedived as well, right? Just last week alone, dropping over 9%. And since its peak here, this instrument has also entered bear market territory, right? I believe, yep, this was the latest. This high on 25th of November was the prior all-time high for US 2000, and this instrument has also entered bear market territory, similar to the Nasdaq, right? So coming back to the daily time frame, right, we can see that the Nasdaq, or the US 2000, sorry, had broken through an overlap support, right? This was previously an overlap support at 1915, right? So this level here is going to be identified as the pivot, right? So any retracement to the upside, right, for this index is likely to be met with resistance. Oh, actually, maybe this, yeah, I think this is fine, right? This was previously a very significant overlap level that gave way last Friday, right? So this is where it could function as now as an overlap resistance, which is the pivot. And in terms of support, right, there's a very significant swing low at 1630 that was formed on 30th of October 2023, which is going to be used in the identification of the first support here, right? All the way down, right? There's no real major support that I can spot. Maybe, if anything, that may be somewhat of a pretty decent overlap here, right? Perhaps just keep an eye on this. Just keep an eye on this level 1766, right? But however, right, I think with the selling pressure so strong, I think this level is likely to give way as well if you do see it being hit. And then the first major support is all the way down at 1633. In terms of resistance, right, there is maybe, I don't know if I should use this. No, probably first major resistance is going to be here, this little swing high that had taken place on 24th of March at 2104. Well, let's see if we can use a Fibonacci retracement as well, starting from this swing high 24th of March going down to the low of last Friday, right? We can see the 38.2% retracement accompanied the pivot pretty well. And let's start one more retracement from this swing high on 25th of November going down to this low here of last Friday. Looking at all the fibs, we can see, right, 50% sits pretty close to the first resistance, so let's keep that on, right? So once again, US 2000, just like many of the other major indices, are continuing to see significant overhead pressures. We're likely to see any retracement to the upside for any of the major indices is likely to be met with resistance at their respective pivots. And just like the Nasdaq, Russell 2000 has also entered bear market territory. All right, so that brings us towards the end of today's session, right? Once again, thanks everyone for tuning in to today's pre-market analysis brought to you by IC Markets, right? Do look out for all upcoming webinars for this week, right? We've got a combination of live analysis and educational topics in English, Thai, and Bahasa, and I look forward to seeing all of you at the next session this week. All right, thanks everyone. Take care. Have a great trading week, and looking forward to seeing you all pretty soon. All right, take care, and catch you guys soon.